Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sointu. This is Fintech Daydreaming.
We're back. Another fantastic episode of your favorite Fintech Daydreaming podcast. We will dive yet again into the world of banking, fintech, and whatever else we find exciting during the next 45 or so minutes. I am Paul Krogdahl. I always have been, probably always will be. And with me, as always, I have got my partner in crime, my fintech extraordinaire and banking expert, Ville. How are you?
Hey, Paul. Doing great.
That was a big sigh. Come on.
Should we say partner in financial crime to be specific, or how should we portray this?
I'm worried that the FBI and everybody else will start chasing us if we say financial crime these days.
That's a good point. So let's just stick to crime general.
Yes. Yeah, it's petty crime. It's stealing your neighbor's apples.
Yeah. And jokes sometimes.
And jokes, yes. I think maybe we need to stop saying crime altogether.
Smart move.
Smart move. Okay. So to our listeners, he's not my partner in crime. No crime at all on this side or that side. In fact, crime, nah, we know nothing about it. But what we do know an awful lot about is banking as a service. Right, Ville?
Yes, seems to be a very trendy topic. We've had several guests on the podcast before to talk about this, and I think we're going to continue on this trend as it's so hot right now. We're seeing these banking as a service providers, embedded finance popping up everywhere. So we might as well talk about it until we run out of fantastic guests to bring on board. But luckily, that's not the case today.
No, it's not. It's not. And I've seen some statistics that say that the growth of the banking as a service domain is set to accelerate over the next sort of 12 to 2 years period. So therefore, I'm really, really excited and interested to have Ion here with us today. In actual fact, I've got some history with Ion. During early discussions with Thought Machine, I got to meet Ion, and we've sort of had connections ever since. He's moved on, but he'll share all of that with us. So, Ion, why don't you tell the rest of the world, who are you? How did you get to where you are? And what is your superpower?
I always think about the Marvel characters when I'm asked that question. Mm-hmm. So hi everyone, I'm Ion Fratiloiu. Very good to be here on the podcast today with you. I take care of the commercial arm of Yobota. Yobota is a cloud-native core banking solution. We're going to talk a little bit more about it later on this podcast as to what it does, what sort of like services and software products it brings to the market. I got into Yobota with the sole purpose of setting up their commercial arm. They were established in 2016, and they're very focused in getting their clients live to market. That was the sort of like primary focus of their investors as well, before going out and branching and scaling the company. So I was simply approached by the CEO saying, hey, how do you fancy doing more than what you're doing right now? And that time I was at Thought Machine, as you said, Paul, and I was carrying kind of like a significant territory, Central Eastern Europe and the Middle East, quite diverse. But I was very keen to sort of like get my hands dirty and set something up. So the previous CEO of Yobota, Amar Akhtar, said, hey, let's explore. How would you go about taking this company to market? And there have been several, thoughts and strategies that we put together, but we kind of all got to an agreement that the next thing that's happening in the market is banking as a service. And we have a special relationship with a client who now purchased us. It's a digital bank called Chetwood Financial. And with them, we're trying to bring a real version of banking as a service to the market. And we'll go into that in a little bit. And prior to Yobota, as I said, I was with Thought Machine. Very interesting company. For me, it was a new place, as I worked previously to that in more of a legacy type provider. Fiserv, Thought Machine sort of had this ambition and still has it, and I think they're doing a brilliant job at it, of changing the face of banking and really kind of making legacy look like the loser in the game almost, simply because they're focusing on that cloud native aspect, the real-time data, the API driven architecture, which is something that you don't have from many other providers out there. So the reason I sort of said I want to jump into the fintech world with Fiserv, Thought Machine, Yobota was simply because I come from a banking background. So I worked for large banks in the past and been an advisor in equity capital markets. And I said, I need a balance to my life. So I thought fintech was the route. Can I fulfill that thought now? Perhaps not, because you still have a lot of projects going on the further you advance in your career. But it's a beautiful journey, and I think I wouldn't change it for the world.
We're actually finding a lot of the guests that we have on this podcast that are working deeply with one of the fintechs actually come from a very strong banking background, or a very strong technology background. But the successful ones are, they have a very, very heavy banking background as well.
Yeah.
Do you find, based on your banking background, that there is a fundamental shift happening where, dare I say, traditional bankers that don't understand this new growth of technology and cloud native are heading towards a world of hurt almost?
Yes, I mean it's so impressive. I didn't work in retail banking when I was in banking. I was more, as I said, in capital markets, but yet technology is applicable across different segments, because there isn't much innovation in that space when you would structure an IPO, and you wouldn't know how the real-time exchange of shares would happen. So there are commonalities that are happening across the different banking divisions. Nowadays, I think when you're talking with bankers that have been so comfortably using the systems that they know probably for 10, 15, 20 years, they sort of realize that there is the time for a change. And the fact that their customers are moving their funds to providers that are able to provide functionality to the end customer and sort of removes the loyalty aspect is awakening call for them. But I think traditional bankers are still yet to understand certain things, which is slowing them a little bit down versus the more modern players. And that is the belief that they always have to sort of change the software to meet their existing processes, whereas the modern players are taking a different approach. They're actually driving with the business proposition in mind and designing their processes to make sure that the software is able to perform and to get them the results they're looking for. And that's a big sort of change that we in technology are trying to educate the financial sector and people in power of changing these sort of software products. So it is definitely a change, since I was in banking to now, but more so I think with a vast choice of players that you can go for.
Yeah, I think
that actually leads me up nicely.
An interesting point. Do you mind, Paul?
Go on, Ville. Go for it.
Just making a note here that you raise a really interesting dynamic in these discussions between legacy and new technology, because while it's critically important to understand how the business actually works, it's not the thing that you can just solve with technology. You need to understand the processes, you need to know about the business and the value and the solution that you're providing. But at the same time, you might not really want to get stuck into this thinking that you mentioned correctly, which is that we've always done it this way. We always will continue to do it this way. We might create a digital version, but it has to be the same process. Yeah. I think that's a great point, because many times when you dig deeper into these questions about do we really need to do this process, the default answer seems to be, oh, it's for compliance reasons. Well, then you go and, well, could we look at the regulation and understand whether that really is the case? And in most of the cases, actually, it is not. It's just the way it's been always done in that specific institution, rather than a definite risk management or a legal requirement. So I think finding a balance between these two things, understanding the business, but still being open to new ways or new, simpler, faster ways of doing things is a really interesting discussion to be had in any institution when you're deploying new technology.
Absolutely. Yes, I completely back that.
Yeah.
But it actually tees up for another interesting question. We started off, like you said, Yobota, banking as a service. We've had a number of guests on the podcast talking about banking as a service. I keep finding that when you talk about banking as a service or banking as a platform or software as a service and all of these other as a service or as a platform paradigms, you end up with an awful lot of confusion. Right. And we are heading towards this whole shift where, like you said, banks need to take advantage of the technology. They are looking at how can they outsource as much as possible? How can they become as streamlined as possible? But, from your perspective, from Yobota's perspective, how do we define banking as a service? Because I've heard so many different definitions of this. It'd be fantastic to get yours.
Sure. I mean, you're right. There's so many definitions out in the market, and I think they are carved in that way to sort of like service a single purpose. So if you look at someone like Rails Bank, they take care of the payments licenses and so on, and similarly to Clearbank, they have that their fifth bank for clearing service in the UK after 100 and so years. So they are calling themselves banking as a service. But for us, what we believe in as the true definition of banking as a service, we believe that it stands in the B letter. So the B letter is something that you provide to a third party, which is a banking license access and a balance sheet, and that caters really well for a different segment of let's say third parties that would be interested in getting those. To acquire a banking license in the UK, especially through COVID, the timeline is at least for 12 months. The other thing is you need a significant capital, at least 5 million, in order to apply for it. And there are a lot of new propositions that are coming to market that simply do not have the time or the capital to sort of like provide to the FCA and get onto the application process. So you have a provider like Yobota together with Sheffield Financial, who is a regulated bank. They have a consumer credit license, deposit taking, and mortgages. And you would like to set up your own business and sort of partner up with someone that provides you the banking license. But also there is access to a balance sheet. And what does that mean? Capital, so that you can start your business straight away rather than looking for individual investors or lenders that can provide you that capital. So those two elements are sort of checked. But what comes to the second part of the acronym as a service is a multitude of components that you can take. You can white label the solution, and that means the entire architecture that's available from the front end origination products through core banking, through to orchestration, through decisioning, comms, and so on, and not worry about going to the market and selecting a multitude of providers for which you will then have to integrate every single item individually to each other. So we're able to sort of like check all these services and software products for a customer that would like to take advantage of having the tech combined with all the regulatory approvals as well as a capital access. That's how we see banking as a service being its true sort of acronym for us. And there are not many providers out in the market leveraging such licenses, capital, and software. There are a few that are, doing more the software, not so much the license aspect. Sheffield Financial has its consumer brands as well, has lending, deposits, and a credit card. And these are, again, they're a bank that had to go through all the regulatory aspects. Now, as part of the service, you can take, as I said earlier, components. You might not need the balance sheets or the banking license because you have that crossed from your list, but you want to design a proposition on a cloud native stack of technology. And again, you don't want to sort of wait for long implementation timelines. You would like to copy the architecture that's already existing and then design your product proposition. So that's how we see banking as a service. It's that element of real banking and how you're supporting a potential prospect from different angles.
It's a fantastically good definition. I really like it. I think it aligns very nicely with my point of view and my perspective. Now, I've got some interesting questions to go with that. Right? Ville and I keep having this joke. We're going to build the Fintech Daydreaming Bank. Right? So you've come along now with a fantastic value proposition. We don't need a banking license. We can just jump onto your platform, pay you some money, license fees. We get the balance sheet, everything else. So now I've got two interesting questions on the back of that. Sure. The technology is a given almost, right? I mean, anyone can create a platform and it's up and running and you can jump onto it. But from a license perspective, I'm assuming that if we are piggybacking on your license, you're taking very high risk on the fact that we are going to, as a pseudo bank, going to operate within the framework of your license agreement.
That's correct, and there's no hiding away from how the structure works. When we look at prospects in the market, and there are several there across different sectors, in the retailers, in the retail sector, energy sector, these individuals do not have such licenses, and we need to sort of understand their customer profile. Because when it comes to leveraging a banking license, and let's say if we provide access to funds as well, call it 30, 50 million and so on, we need to understand the risk associated with the customers that are coming in. And we need to be able to work on a pricing structure that works for that end customer together with you, because ultimately the risk taken is by us and the bank. And if the end customer doesn't pay, then we will need to deal with the collections and so on. But the sort of like idea of the Chetwood brands, the lending brands that they have, and savings products as well, it's sort of targeted as at a near prime market segment, and that works pretty well in the sectors that we're trying to go after, because they're having similar credit scores, there's a similar sort of adoption. You can see more of the customer profile, and to add to that, in the UK market, you have way more access to data via open banking about consumers, so how to sort of manage those customers, and to kind of like take it a step forward to kind of like highlight our risk appetite. Chetwood has designed this product called Live Lend, and again, they're going after a segment that is a bit more risky than others. But because they have integrated into all the solutions into a cloud-native architecture, and they obtain real-life data, they have designed a loan product that basically changes its interest rates based on the credit score of the customer. So today, you might choose to apply for a loan of £1,000, and you're approved, but your credit score is, let's say, 600 out of 1,000, and you get an interest at 25-30%, for example. In 6 months, you prove yourself as an end customer that you're paying your loan back, and your credit score has improved. The loan automatically adjusts its interest rate to service you as a customer, and ultimately better your financial position. So we're leveraging technology to understand accurately where is the customer in their sort of like duration of a loan, and how are they performing in terms of the credit score. So when it comes to leveraging that risk with a third party, we have tools that we can really identify how the customer risk profile would look like in anticipation of applying for a product.
You actually mentioned there two things that sparked off another question to me: data and customer. So in this world of banking as a service, where Ville and I initiate our Fintech Daydreaming Bank, who actually owns the client relationship? Is it Fintech Daydreaming Bank, or is it Yobota?
So If you are bringing your customers and the relationship, that would be you. If you're accessing the capital that we provide, we will need to work together on agreeing a sort of pricing model and a risk category that works for both sides. But ultimately, the journey that you want to acquire the customer and the further on relationship with them, that can be managed directly by Fintech Daydreaming.
So that links into another question, which of course is the geographical dimension into the whole banking as a service conversation. Now, as we know, the banks, and in this case, Chetwood Bank, is tied to the jurisdiction, in this case, UK. The license is granted and they are supervised in the UK. Now, increasingly, of course, these fintechs, they want to operate on a global scale. So let's say that we have identified that the Fintech Daydreaming Bank, we have a very good audience in Taiwan. That is actually partially true. So hello, our Taiwanese listeners. So we would like to start a Fintech Daydreaming Bank in Taiwan. Now, obviously, the banking charter of your bank doesn't really work there. But how do you see this this scaling in these cases where the fintechs might have a global ambition, or at least a multi-jurisdiction ambition? How do you see this world moving forward, and what are the limitations today?
Sure. I mean, like, there are a couple of elements from a technology standpoint, as you pointed out, Ville. The banking licensing aspect wouldn't apply to Taiwan. We are regulated by the UK entity, and we would need to identify a banking partner that would ultimately work with us and position the proposition with that client in Taiwan. The elements that the Fintech Daydreaming can take to Taiwan are the second part of the acronym, as a service. You can take components around managing your clients, creating financial products. You can leverage the reporting side of things that we have in the tool, all the orchestration journey with the different workflows, the credit decisioning engine that we provide, different communication engines that we allow you to sort of manage your customers. So there are the components that can be leveraged here. Of course, the banking license or the capital would be provided by someone who has a presence in that jurisdiction. But how are we solving this problem of like not having to install the system or the architecture each time you're moving to a different country? So it comes really from the back end system. So the core engine that we've developed has a multi-brand capability, and this is not sort of like anything new in the market. But the whole principle of it is that if you have a company that has under its umbrella a group of other companies, we consider them as brands, and we have segregated the information on the platform so that it keeps data separated from one brand to another. And we went a step further. We saw what Chetwood wanted to do when they were a client of ours before the acquisition. They were really keen to launch a brand and have its own sort of third-party API integrations with third-party providers. And they needed certain providers to be selected for brand A versus brand B. So we allowed them to plug and play solutions, third-party solutions, into the core as they wish per each brand that they want to launch. And that sort of principle is taken further when you're looking at the international expansion. We have actually a client that's due to be announced very soon in the UK market, but their ambition is to go to the US as well. So how are they leveraging the platform? They don't have to install the system all from scratch. They just need to make sure that whatever payment system or open banking provider that they wish to work with is the one that meets the regulatory demands of the US market. But in the end, they'll be able to see if they have a customer who is from London and would like to apply for products because they're launching their business in the US market. They can see how those customers move across the different brands. So that's how we thought of it. Yeah,
and would you typically help your fintech customers in finding these partner banks, like in our case in Taiwan? Would you help us find a proper Taiwanese bank that you might have already in your network, or you might already know, or are they typically brought in by your customers themselves?
Yes, we have an area of partners across the banking, consulting sector, technology, cloud as well, because obviously the cloud providers are different in every market and they go through their own regulatory approvals. So we have a set of relationships that we can leverage across those opportunities that are not based at, in the UK at home. We are very, considerate of the fact that the license can be leveraged, and therefore we just make sure that the banking partner that we identify or suggest to you kind of meets the same ambitions as you would in that specific market.
Actually, changing tact a little bit, Ville, when we were at the Nordic FinTech Summit, we reflected on the fact that if you went back probably about a year, 2 years, every single fintech that would be at a summit like that would be focused on front end, right? Customer journeys, front end capabilities. This year, when we were there, I would say probably close to 80%, if not more, were core providers, back-end providers, banking as a service providers. Just reflecting a little bit, is this space not becoming saturated? I mean, do we need more providers in this space? What do you guys think?
I think it's a really good remark, to be honest, Paul. It is a busy sector, and I get to find out another provider every other day. That there's a new core provider coming to the market. But at the same time, I believe that there is also a significant demand for such services, because you have the likes of Mambu, 10x, Thought Machine, Open, 5 Degrees, and then in the US you have Finxact, Nimbus, Neocoba, all sort of like catering for a specific target market, and they all start in an area which is fairly easy to deploy. That's primarily retail banking, and with products that are also very easy to build. And you would find that when you're looking at the market and where are the trends nowadays and the different waves of core banking providers, you do have the cloud native versus legacy. There's also modern legacy, a term that I've heard quite a few times being spoken actually at events, where people nowadays are putting the sort of like flexibility and the sort of like customer journey at the forefront of their business. I was talking with a very sort of like significant bank, tier bank at the previous event, where they were just saying how slow it would be for them to go out and ask their existing provider to build a new financial product. They said it will be probably 18 months until we can launch, and we're already suffering because our customers are moving their funds to other providers, which are the fintechs. So when you put that sort of like reflection into how many providers are there, you have Thought Machine who's going after the tier ones, and they provide you with a very, very flexible engine that works really well for that sector, because tier one banks have the capacity and the resources to really model the platform the way they wish. So it means that you have to build a lot from scratch. You have Mambu who's going for lower tiers and more fintechy type clients who are very happy to take what's available off the shelf, but they're not putting a demand on allowing for the same innovation like Thought Machine would have, or the same flexibility in changing the financial products. And then you have Yobota, who's trying to give that flexibility to customers, but also off-the-shelf products that are fully functional with a lot of economics and accounting capabilities behind it. So there are quite a few providers in the market, and we're slowly starting to see some consolidations happening as well. I don't know if you've heard Money 2020 in Amsterdam in September. Vodino and Temenos announced a partnership to kind of like elevate a little bit more the technology Temenos has, because it's not as advanced as the new provider, simply because it's built on a new tech stack. They're trying to upgrade them, but they're not a like for like. And the same in the US. Fiserv, my old employer, acquired Finxact, which is a cloud native provider, also targeting tier one platforms. And there are more of these type of conversations happening in the market, where you see the likes of Finastra, Infosys, and so on, realizing that instead of them building something from scratch, which would take a number of years versus the available core cloud native ones, they would much rather take the partnership route. Because another big element which the legacy providers have to deal with is not necessarily updating their tech, but it's migrating their customers to a new version of the product. And you can look at 2-3 years migration of a software version to the latest one for some significant banks. So yeah, there are consolidation elements, there are challenges there. There is a little bit of everything for everyone. But as the cloud native core banking providers are evolving, they are also evolving with their availability of different features.
Yeah.
So yeah.
Yeah. So just 2 comments to add from my perspective. First of all, it's a hot market, so obviously there's going to be a lot of competition, and that's a really good thing. I think what we're going to see next is segmentation. So we will have different providers targeting different levels in terms of size, but also industry segments. So we will have somebody catering for certain types of banks or other types of fintechs. Again, specialization on the offering is probably going to reflect also on the banking as a service provider side. Some are stronger in other places than others by design. The other comment is that I think the reason why we have so many providers is because there's a lot of work to be done. So there's a huge amount of complexity. We already talked about the amount of legacy already in place. Trying to replace and modernize those setups is very time consuming and expensive work. So the opportunity size is fairly large. And the processes take a very long time. The end result is going to be there somewhere, and we're going to see this consolidation. But for the time being, I think there's enough work to be done for everybody in this space due to the complexity and the amount of legacy. So I think it's quite inevitable that we will see a lot of players in this space, and that's a good thing.
Absolutely.
I think we're also going to continue to see consolidation or mergers and acquisitions of the financial institutions as well, which will drive for the need to harmonize and modernize core systems. And maybe a good way of doing that is to move more towards a as a service paradigm.
That's true. I mean, that's historically true as well. Just look at the Nordics. We had hundreds and hundreds of banks just 100 years ago. Now we pretty much have a handful of large banks, and all of them are consolidations of these hundreds of banks from the past. So yeah, it's been happening a long time, and it's going to continue to happen.
Yeah. So what's next for Yobota?
We have an ambition to go after sectors that are not necessarily overcrowded in terms of targeting by the ones that we mentioned. We want to elevate the financial wellness of certain audiences in the market, together with Chatwood Financial by leveraging the BaaS proposition. We want to bring more products to the market, and through this being purchased by Chatwood, we are able to do so, especially in areas where we haven't been able to offer those products to customers. And essentially, we want to take the company to an international level as we see the client growth in different territories. So as I mentioned already, there's plans for a customer to potentially expand into US market. That could also be for us a natural fit of expansion as well. But the forefront of our business going forward with this acquisition will certainly stay with a focus on banking as a service and all the elements that I described earlier.
Fantastic. Excellent. So very often on our podcast, actually every single episode of our podcast, we like to lighten the mood a little by having a good but bad joke. I tend to do them at the end, towards the end, after we've had some real deep, interesting discussions. Ville likes to kick off with it. So I'm wondering, you don't by any chance happen to have a fantastically bad fintech or banking joke you can share with us so that we can go out of this episode with a smile and a laugh?
I do have a one or two that I could use. So I'm going to ask you one. So why did the skeleton not rob the bank?
Oh, I don't know.
Well, because he did not have the guts. A bit silly, isn't it? But I
it's fantastic. You've been picking up the jokes from the same place we have, right at the bottom of the dustbin. It's fantastic. Thank you.
Yeah.
Oh man, that's good. So as always, we're heading towards the end of this episode. It's been a really fantastic, interesting discussion. I'm just wondering very quickly, Ion, is there anything that you feel that we've missed that you would have liked to have shared with our listeners?
I mean, quite frankly, the market is ever so changing, and I think there is a certain adoption of new technologies in the market by large players. They do realize that there is time for change, and more so, they realize that they could create new business revenues through offering banking as a service propositions, as the case of Yobota and Chetwood Financial, them being a bank. And there are more of these propositions coming to the market, as we've seen HSBC announced an element of that as well for the SME sector. And yet, perhaps their technology still needs to be changed in many areas. They're trying to stay on the bandwagon. So I think it's a matter of how you're thinking about technology, how you're thinking about your business proposition, and sort of like how you're leveraging what you've invested in. Because ultimately, yes, there are huge projects, huge implementation timelines, but ultimately, if you have that capability through the technology to generate more revenue apart from just your usual end customers, then you need to look at technologies that enable you to do that.
Fantastic. It's been a great discussion. It's been an absolute pleasure having you join us here today. Before we finish off, Ville and I would like to give you the opportunity to let the listeners know how they can contact you if they want to know more about Yobota, your services, your capabilities, or just discuss life with you.
Yeah, no, I mean, I am available on LinkedIn. The company's website is yobota.xyz. You can also meet us at the following events. We're attending the Old Fi event and also Money 2020 in Amsterdam. So it would be great to meet in person with whoever wants to know more about the company.
Fantastic. Thank you very much for joining us on this episode of Fintech Daydreaming. And as always, to our lovely guests, if you've stuck with us through this episode, we're really pleased that you have done so. As a finishing touch, we really would like you to smash the like button on the podcast episode. And whilst you're at it and feeling click happy, hit the subscribe button as well and leave us really a nice comment or a bad comment. I mean, it's up to you, but we've learned that apparently a comment is worth more than 5 likes. So please leave us a comment. Let us know what you think. Let us know what you would like some of our future episodes to cover, what we should look at, because those comments and those likes and everything else helps us to grow. And the more we grow, the more excited Ville and I are to bring you additional guests and episodes and content. Until Ville and I come back in 2 weeks' time with another episode, we hope you have had a fantastic Easter and talk to you again soon. This has been Fintech Daydreaming.
This is Fintech Daydreaming.